Hi, I'm Tom Lydon, editor of ETF Trends here in Hollywood, Florida at the Inside ETF conference. And I'm here with Todd Jablonski, who's Chief Investment Officer and Head of Global Asset Allocation and Edge Asset Management at Principal Financial Group.
Hi Tom, how are you?
Great seeing you, Todd.
Happy to be here.
You folks have a lot going on, but specifically I want to pick your brain on what advisors should be thinking about today, specifically to the markets. How are you looking at the markets today?
Markets are pretty interesting these days, Tom. What we see is one, high valuations on a lot of risk assets, particularly equities and high yield debt. And in particular, what we see are valuations threatened by what we are describing as a rich environment for policy error. Whether it's our reform around healthcare, whether it's a reform around taxes, fiscal stimulus apparently hitting the US in the near term, plus tightening on the monetary side. When you have all these human decisions effectively affecting the markets, moving the markets, we see a rich opportunity for human policy error that has the ability to really spook the markets and drive what we think could be a bit of a pullback on risk asset prices. Now, high yield spreads are tighter than they have been over the last 3 years. We believe that a more defensive posture in high yield is appropriate, and in our ETF ticker YLD, we have essentially de-risked some of our income generating options there to prepare high yield investors for essentially what could be a troubling, potentially volatile 2017.
This is an active ETF, correct?
This is an absolutely active ETF, whereas most players in the space like to go passive. We believe that active management works, and despite the struggles that active managers have had, we think the key to long-term active success is having a long horizon. Therefore, we keep our turnover inside of YLD at less than 20%, which means each name has to be a 5-year idea. That kind of long-term focus in active management is where active management works.
So there are not that many active high yield funds out there. What are some of the advantages of being active in this space?
It's flexibility more than anything else. When you're managing a high yield portfolio and you're strictly indexing, you're sort of forced to hold on to that index. And when we're using an index, essentially a cap-weighted enterprise, that's one way to do it, but I'd like to know more about the investments in just their market cap. In particular, even though our ETF competes with standalone high yield, we typically have about 35% equity in that portfolio, and we can replicate many of the exposures of high yield with different instruments. So with active management, we have the flexibility to replicate high yield. I think it's a very interesting ways.
Excellent. Well, Todd, great seeing you and look forward to seeing you again soon.
Thanks, Tom. Appreciate it.
Thank you.